Okay, good morning, everyone. This is the September 10th Board of Administration meeting for SDCERS. I'm going to go ahead and call the meeting to order. And before we get started, I would actually like us to take a moment of silence. Tomorrow marks the 20th year after the 9/11 attacks, and we want to just think about all of the victims and their families and send our good thoughts. So please join me in a moment of silence. Thank you, everyone. Melody, would you please call the roll?
Yes. Karina Coleman.
Present.
Michelle Bush.
Present.
Natasha Kalura.
Present.
Lisa Marie Harris. Okay, I'll come back to her. I see that she's here.
Oh, here. I was on mute. Sorry.
Thank you, Lisa. Charles HOGQUIST.
Present.
Paul Kaufman.
Here.
Paul Lotz.
Here.
Louis Magi.
Present.
Sarah Mann.
Here.
Louis Nguyen.
Here.
Cliff Shearson.
Here.
Bobby Spoon.
Here.
Okay, and Brett is out today.
Okay, great. Throughout the meeting, we're going to be asked to take a number of votes. If you do make a motion, please state your name when doing so, and that makes it easier for our board secretary. Also, I would like to thank Ms. Cynthia Joyner. She is going to be retiring from SDCERS after 20 years of service, and she is going to be dearly missed, I'm sure, by all those at SDCERS, the board members. We have really been blessed to have her as part of the team, and so we certainly want to thank her for her amazing service, and she has really been an asset to SDCERS, so we wish her all the best. And then Cynthia's backup, Melody Hazard, is going to be joining us today, and she's going to support the board. I would also like to take a moment to recognize and congratulate our SDCERS board member, Sarah Mahan, for accepting a job with the city of Chula Vista. And this also regrettably requires that Sarah end her board service with SDCERS when her city employment ends. And thank you, Sarah, and we wish you all the best with your new job. And, looking to the future, staff will be conducting a special election for Sarah's replacement. So all the best. I'm glad that she could join us today. All right, so I will now ask if there is a quorum.
Yes.
Okay, and is there any public comment?
No.
No, okay, then we'll move forward. I'm going to ask the board for a motion and a second to approve consent agenda items A through D.
This is Charlie. I'll make the motion.
This is Bobby. I'll second it.
Wonderful. Can we have Melody call the roll, please?
Yes. Okay, ready to vote? Karina Coleman.
Yes.
Michelle Bush.
Yes.
Natasha Kalura.
Yes.
Lisa Marie Harris.
Yes.
Charlie HOGQUIST.
Aye.
Paul Kaufman.
Yes.
Paul Lotz.
Yes.
Louis Magi.
Yes.
Sarah Mahan.
Yes.
Louis Nguyen.
Yes.
Cliff Shearson.
Yes.
Bobby Spoon.
Yes.
All votes are in. Motion passes 12-0.
All right, great, thank you. The next item on the agenda is a business operations item. It's confirmation of a board vice president. And I'm going to recognize Greg Rademacher at this time to walk us through that process.
All right, thank you, Karina. It's a pleasure to see everyone this morning. The SDCERS board unanimously appointed Karina Coleman president at their July 2021 meeting. And the SDCERS charter policies provide for President Coleman to appoint a vice president with concurrence of the board. And Ms. Coleman has selected Paul Kaufman as our vice president because she believes he is exceptionally qualified to serve as vice president due to his commendable service on the audit committee chair this past year, along with his business acumen and strong leadership skill set, which includes using SDCERS core values of customer service, accountability, professionalism, fiduciary integrity, and transparency. The board's confirmation of Paul Kaufman as SDCERS vice president will require a motion followed by a second and at least 7 affirmative votes.
All right.
It's CLIFFORD. I'm happy to move.
This is Charlie. I'll second it.
And before we call the roll, I would just like to mention, Paul, I've been so impressed by your dedication. Thank you so much for always being so professional and really bringing us all to a higher standard of integrity here and just really been an asset to the team. So thank you.
Karina and Greg, thank you.
Ready to vote? Okay, Karina Coleman,
Yes.
Michelle Bush,
Yes.
Natasha Kalura,
Yes.
Lisa Marie Harris,
Yes.
Charlie HOGQUIST,
Aye.
Paul Kaufman,
I'm going to recuse.
okay, Paul Lotz,
Yes.
Louis Maggi,
Yes.
Sarah Mayen,
Yes.
Louis Nguyen,
Yes.
Cliff Shearson,
Yes.
Bobby Spoon.
Yes.
All right. So I think that passes with one recusal from Paul Kaufman.
Yes, motion passes.
Wonderful. Great. Thank you all so much for that. We're actually not going to be covering the audit committee. There is a summary of the meeting held on July 8th in your board packet. And the audit chair, Paul Kaufman, provided the requisite committee report to the board at our July meeting. So we're not going to have a discussion on that today. And we're going to move right ahead to the Disability Committee, and I'm going to recognize Charlie HOGQUIST.
Aloha, everybody.
Aloha.
Okay, you got me up before the chickens this morning. So if I start to yawn, please forgive me. Yesterday's meeting was rather brief. We have 2 items on the consent ability. Both were recommendations to deny industrial disability retirements to 2 applicants. We did discuss those matters, and they were all voted unanimously to support that recommendation by the committee. If anybody has any specific questions about those items, please ask, and I'm sure that Susan can answer those questions.
Any questions for Charlie?
All right, then I moved for approval.
All right, no second is required, so we're just going to ask Melody to call the roll.
I know, but it's not letting me open the voting here. I'm sorry, just a moment. It's not letting me open the voting down here. Okay, ready to vote? Karina Coleman,
Yes.
Michelle Bush,
Yes.
Natasha Kalura,
Yes.
Lisa Marie Harris,
Yes.
Charlie HOGQUIST,
Aye.
Paul Kaufman,
Yes.
Paul Lotz,
Yes.
Louis Maggi,
Yes.
Sarah Mayen,
Yes.
Louis Nguyen,
Yes.
Cliff Shearson,
Yes.
Bobby Spoon.
Yes.
Okay, all votes are in. Motion passes. 12-0.
Okay, great. Thank you. The next item on the agenda is the Business and Governance Committee update, and I'm going to hand it over to Roberta Spoon at this moment.
All right. The B&G committee met yesterday, and the committee approved action items 1, 3, and 4 by unanimous vote. We pulled action item number 2 from the consent agenda for separate discussion. And before I review action items 1, 3, and 4 and make a motion for the consent agenda approval, is there any action item any board member would like pulled for discussion or for separate vote? Okay, hearing none. Action item number 1 on the is the calendar for next year, the board and committee meeting schedule. We approve that. Action item number 3 was staff's recommendation to amend the securities litigation policy. Johnny gave an overview of the securities litigation policy and recommended the board increase the threshold for estimated losses needed in order for SDCERS to actively participate in a securities action. The increased loss threshold reflects the growing costs of litigation and hiring outside counsel. The committee unanimously adopted the staff's recommendation. Action item number 4 was staff's recommendation to approve a contract extension with CGI, and the committee unanimously adopted the staff's recommendation to extend that contract and to approve the city's existing master services agreement and align with the start date of the city's new MSA with CGI Technologies. Action item number 2, which was pulled from the consent agenda, we received a presentation by Marcel, and it was a discussion of this SDCERS funding objectives policy, and the committee provided direction to the staff to make no changes to the existing policy, and therefore it did not require any action on this at this time. Are there any questions on the action items? If not, we'll move on to the reports. Member services.
I'm sorry, Bobby, can we have a vote on the consent agenda items?
Oh, I'm sorry. Yeah, I guess we do need to vote. Thanks for stopping me.
You bet.
Okay, so I'll make a motion to approve the items on the consent agenda.
Okay, great. No second is needed, so Melody, you'll call the roll.
Okay, ready to vote. Karina Coleman,
Yes.
Michelle Bush,
Yes.
Natasha Kalura,
Yes.
Lisa Marie Harris,
Yes.
Charlie HOGQUIST,
Aye.
Paul Kaufman,
Yes.
Paul Lotz,
Yes.
Louis Maggi,
Yes.
Sarah Mayen,
Yes.
Louis Nguyen,
Yes.
Cliff Shearson,
Yes.
Bobby Spoon.
Yes.
Okay, all votes are in. Motion passes 12-0.
Okay, thank you so much. Bobby, did you want to continue updating the board on the reports that were presented?
Yes. We first heard from Cynthia McLean on the Member Services Division report. Cynthia explained the team's efforts to respond to member inquiries regarding the recent raises for city employees and the effect on their future retirement benefit, and the participation in the Deferred Retirement Option program known as DROP. Staff is also receiving an increase of questions from new employees that are being hired to the city, the port, and the airport. These questions are very complex due to the many rules regarding membership in the pension tiers. So they have been exceptionally busy this past period. The second report we heard from Marcel, the Benefits Administration Division report. And Marcel provided a Prop B update on the city reopening the plan to new hires starting July 10th of this year. Since then, the city has hired approximately 60 new non-police employees who have been successfully set up in the SDCERS plan. The third report we heard from was from Dave Bond, the Information Technology Division report. Dave provided a status update on the city's 2 new master services agreements, CGI for application support and Zenzar for enterprise computer services. Both new MSAs have been approved by the City Council and are circulating for final signatures. SDCERS has begun discussions with the vendors, and the board can expect SDCERS riders to the new MSAs brought for approval in the coming months. The IT department completed its first capital project of fiscal year 22 by seamlessly migrating SDCERS server farm. The server farm is a core infrastructure component housing all of our servers and applications. The new server farm features next generation technology with improved management capabilities. We did not receive oral reports from the remainder, but we did receive written reports from Johnny Tran on legal and compliance. And Ted, I asked Ted to speak for a moment. Ted's finance division has received the Certificate of Achievement for Excellence in Financial Reporting for the June 30th, 2020 annual financial report. And that was, in my recollection, it was the 17th time they've received that award and the 13th consecutive year. And Ted has been here for 8 years, and he has received that award all 8 years that he's been with SDCERS. So that's really a big accomplishment.
Wow, congratulations, Ted and
yes, Ted and Ted's team, because it certainly takes a team to put that together. But it's a big deal, and I don't want to minimize it just because they've received it so many times. But it certainly, from an accountant standpoint, gives me comfort to know that the finances are in such tremendous shape. Ted produced the financial statements for June 2021 and the budget report for June 2021. There were reports on members owing in excess of $10,000, the report of fees paid in excess of $50,000, and then the travel and training report. And that's all we have. So back to you, Karina.
Okay, great. The next item we have is the investment committee. And I'm actually going to recognize Cliff Shearson, our new chair of the investment committee. We met yesterday, and Cliff is going to update the board.
Thank you very much, and hello, everyone. This is my first presentation on this topic, and it may not be quite as smooth as my colleagues who have more experience in their respective areas. But we, as Karina said, we did have a good meeting yesterday, and we had 3 action items. We'll touch on each of them in a moment, but for the record, they were all voted on and voted 5 in favor and 0 against. The first one was an action item was the staff and consultants recommendation for a $35 million commitment to a real estate fund called Almanac Realty Securities 9. It's a non-core real estate fund. And to give you a little bit more background on this, I'll ask Jamie to please comment now.
Great. Thank you, Cliff. So you have in front of you staff and consultants' recommendation for a $35 million commitment to the Almanac Realty Securities 9 for SDCERS non-core real estate allocation. The fiscal year 2022 real estate investment plan called for a total of $70 million to be invested in non-core real estate. This is the first recommended allocation for fiscal year 2022. Fund 9 is the successor fund to Almanac Realty Securities 8, in which SDCERS is an investor. That fund has a projected end-of-life IRR, or internal rate of return, of 12.5%, which does exceed its target objective. Additionally, SDCERS has had a good relationship with Almanac and has received strong customer service throughout the relationship. Almanac Realty Securities 9 is a closed-end, non-core fund focused on providing capital to experienced real estate operating companies that own real estate assets. Rather than acquiring an individual property, Almanac will acquire a real estate company that owns underlying real estate. This is referred to as entity-level investing, and it allows them better access to diverse real estate portfolios and to utilize the specialized skill sets of each company in which they invest. The fund is targeting a net IRR of 12% over the fund life of 10 years with 3 potential extensions. There are 2 reasons for this recommendation. First, staff believes that the high current income of 69% expected for this fund, combined with the ability to participate in the equity upside, gives Almanac an advantage over other funds currently in the market. Second, this is a value-add fund. Value-add investments derive their return from a combination of income and appreciation. Value-add is also lower on the risk spectrum as compared to opportunistic, which is the other type of non-core real estate. Currently, SDCERS is below its target for non-core and specifically value-add. Over time, as capital is called from Almanac Fund 9, this will help to increase SDCERS exposure to both value-add and the non-core allocations. Finally, due to the Townsend aggregation of capital, SDCERS is eligible to participate in a fee discount of 10 basis points. This brings the management fee to 1.15% on capital commitments. This concludes my formal comments. As Cliff mentioned, yesterday the committee voted 5-0 to approve this investment, and I would be happy to answer any questions that you have at this time.
All right, then, hearing no questions, do I, Karina, ask for a motion, or do you do that?
You can actually make the motion, Cliff, and as that chair of the committee, you do not actually need a second, and then can call the roll. But definitely a compelling investment opportunity here with Almanac, and it really helps to get that value-add exposure. So I would be in favor.
And I'm happy to move. It was a lengthy and detailed presentation, and enough said. I think Jamie really touched on all the super relevant points here.
All right, great. So Cliff, you've moved. Melody, you want to call the roll?
Yes, ready to vote. Karina Coleman?
Yes.
Michelle Bush?
Yes.
Natasha Kalura?
Yes.
Lisa Marie Harris?
Yes.
Charlie Hogquist?
Aye.
Paul Kaufman?
Yes.
Paul Lotz?
Yes.
Louis Maggi?
Yes.
Sarah Mayen?
Yes.
Louis Nguyen?
Yes.
Cliff Shearson?
Yes.
And Bobby Spoon?
Yes.
Okay, all votes are in. Motion passes 12-0.
Thank you very much. The second action item was to approve the GCM Grosvenor Private Markets Program Policy and Investment Plan. And we had presentations on that by Jamie Hamrick and Bernard Yankovic. And as I mentioned before, the committee voted 5-0 to approve. And to expand and give you more background, I'd like Jamie again to make some comments here.
Great, thank you. Thank you, Cliff. Each advisor reviews and updates their investment plan on an annual basis. The investment plan details the investment strategy, the updated investment pacing for the fiscal year, and summarizes the risk management process in place. Investment pacing refers to the amount of capital that the manager expects to deploy in the coming fiscal years. And although no changes are recommended for this year, a copy of the Private Markets Program policy was included in your materials. This document establishes the high-level parameters in place that dictate how the private equity and infrastructure programs can invest. I wanted to provide you a brief overview of the investment themes for fiscal year 2022. GCM Grosvenor expects to commit $175 million in fiscal year 2022. This is an increase from the $166 million that was committed last fiscal year. The investment pace was accelerated as deal flow increased post-COVID recovery and to keep pace with the strong recovery in public markets that led to an increase in SDCERS total plan assets. Healthcare and technology will continue to be areas of focus given the strong demand for these sectors. Aside from the updated pacing model, GCM expects to follow the same investment approach that they have employed since the inception of the program in 2009. GCM will continue to favor opportunistic investments with higher risk-adjusted return potential. Opportunistic investments refers to the fact that they are not trying to make SDCERS look like a model portfolio. Rather, they simply seek the most suitable investments for SDCERS portfolio. GCM will continue to focus on J-curve mitigating strategies with secondaries and co-investments to provide appropriate risk mitigation for the portfolio. J-curve mitigating strategies refers to strategies that have higher current cash flow so that there is not a negative return in the early years of an investment. And finally, GCM Grosvenor will continue to take advantage of their competitive advantages by exploring investments in small and emerging managers, middle market buyout managers, and co-investments and secondaries. With that, this concludes my comments. As Cliff mentioned, this was approved 5-0 at the investment committee yesterday, and I would be happy to answer any questions that you have.
All right, then, hearing no questions of Jamie on this, I would be honored to move that we approve the program policy and investment plan for GCM Grosvenor.
Okay, ready to vote?
Great. Cliff, Melody, do you want to call the roll? I'll just comment that the new report, I really liked it. It was very crisp, easy to follow. So kudos to Bernard for,
Thank you.
For doing
I'll let him know.
Yes.
Ready to vote? Okay, ready to vote. Karina Coleman?
Yes.
Michelle Bush?
Yes.
Natasha Kalura?
Yes.
Lisa Marie Harris?
Yes.
Charlie Hogquist?
Aye.
Paul Kaufman?
Yes.
Paul Lotz?
Yes.
Louis Magi?
Yes.
Sarah Mayen?
Yes.
Louis Wynn?
Yes.
Cliff Shearson?
Yes.
And Bobby Spoon?
Yes.
All votes are in. Motion passes 12-0.
Thank you, Melody. Our third action item has to do with the recommendation to approve the SDCERS rebalancing model. And for those of us who familiar with this, it's very important that the different parts of a portfolio, as they may rise or decline over certain periods of time, be rebalanced to be certain that the appropriate risk that's inherent in the key decision on the overall portfolio construction be maintained over time. We had a very healthy presentation by Anders, Katie Comstock, and Ashley Westy from Aon, as well as some people from BlackRock. And for this, I'd like to turn the discussion over to Anders.
Thanks, Cliff. Good morning, everyone. This is a recommendation to approve SDCERS rebalancing model. And as you may know, the purpose of rebalancing, as Cliff alluded to, is to minimize unintended drift away from our strategic asset allocation policy, also known as kind of tracking error. So having a robust rebalancing model also forces SDCERS to adhere to what we refer to as the golden rule of investing, which is to buy low and sell high, by selling assets that have gone up in price and buying assets that have gone down in price. SDCERS rebalancing model goes through a formal review every 3 to 4 years, just to make sure that it's appropriate and adheres to best practices. And the last review was completed in 2018. So the current version of the rebalancing model, which was approved in 2018, has a plus minus 3% rebalancing range around each public market asset class and a plus minus 5% range around private markets. And the reason for the wider range around private markets has to do with the less liquid nature of private markets. And as you may know, as liquidity increases, so does the transaction cost. So we don't really rebalance private markets in a traditional sense, but we manage private market rebalancing through distributions and additional contributions. When a rebalance is triggered, you can either rebalance all the way back to the target. So if we have a plus minus 3% range on a 5% allocation, we'll be rebalancing back to the 5. Or you can rebalance back to the outer boundaries, which will be the plus 3% range on the rebalancing model. Or you can rebalance back to the midpoint, which would be the midpoint between the 5 and the 8. So if my math is correct, that'll be 6.5. And the benefit of rebalancing back to the midpoint is typically lower transaction costs. Now, that was a short synopsis of what the current rebalancing model looks like. The actual review process to determine if any changes to SDCERS rebalancing model is warranted focused on the two most important factors when looking at rebalancing, which is transaction cost and, as I mentioned earlier, tracking error. So when trying to keep the asset allocation as close to the target as possible, there is a trade-off between tracking error and transaction costs. If you focus only on transaction cost or tracking error, and keeping that as low as possible, you'll spend a lot of money rebalancing the portfolio, and transaction costs will be high. And vice versa, if you focus only on transaction costs, you will trade less, and that will lead to higher tracking errors. So staff asked BlackRock to run an analysis using their large databases of market data to review several scenarios of SDCERS rebalancing model to determine the impact of those two factors on SDCERS total fund. So with input from Aon, we identified the two most appropriate scenarios, which were keeping the 3% band or switching to a 5%. And after reviewing those two scenarios, both staff and Aon agreed that the current rebalancing model was still the most appropriate for SDCERS based on this trade-off between transaction costs and tracking error. So the recommendation is therefore to approve SDCERS rebalancing model with no changes. And as Cliff mentioned, this was approved 5-0 yesterday at the investment committee meeting. And with that, I will open up any questions if there are any.
All right, then, hearing no question of Anders, and Anders, thank you very much for that very useful summary. I'm pleased to move to approve the rebalancing model.
Ready to vote?
Yes, we are.
Karina Coleman,
you're on mute.
Oh, sorry, yes.
Michelle Bush,
Yes.
Natasha Kalura,
Yes.
Lisa Marie Harris,
Yes.
Charlie HOGQUIST,
Aye.
Paul Kaufman,
Yes.
Paul Lotz,
Yes.
Louis Maggi,
Yes.
Sarah Mayen,
Yes.
Louis Nguyen,
Yes.
Cliff Shearson,
Yes.
Bobby Spoon.
Yes.
All votes are in. Motion passes 12-0.
Thank you very much, Melody. We have 4 information items to share with the board today. And for the first one, the total fund performance report for the quarter and for the fiscal year ended June 30th, 2021. I'd like Liza to please take the floor.
Thank you, Cliff. Good morning, everyone.
Morning.
I'm going to cover performance for the quarter and for the fiscal year. And can we please start on slide 6? Great, thank you. So this slide basically shows you the change in market value during the course of the fiscal year. And as you can see, we began the year at a market value of $8.3 billion and ended the year at $10.3 billion. And that translates into appreciation or growth in market value of $2.1 billion, and we had net withdrawals of $168 million. We currently stand at about $10.8 billion in market value, and I don't have to tell you that's the highest market value in the history of SDCERS. So turning to slide 9, these are the total fund returns for the quarter and for the year and longer time periods. So for the quarter ended June 30th, we had a return of 4.8% versus 5.1% for the benchmark. And that's largely a result of the fact that private equity trailed its benchmark with a return of 7.3% versus 11.1%. And we had one private equity advisor who had more exposure to buyouts and distressed or special investments, which had lower returns than the benchmark. But keep in mind, we do not evaluate private equity on 1 quarter or even 1 year basis. These are long-term 10-year investments. And so we look at the net internal rate of return, which currently stands at 17.6%. Then we move to the year where we had a return of 24.9% versus the benchmark at 24.4%. And that's the best return we've had in the last 20 years, and I believe it's the highest return we've had actually since 1986. So it was a very good year for performance. The key driver, obviously, was stocks, U.S. stocks and non-U.S. stocks. And that's a reflection of a rebound in global economic growth and strong corporate earnings, which translates then into higher stock prices. On a relative basis, we outperformed the benchmark, basically, which came from active management. And those are managers who are trying to outperform their benchmark. And not all managers outperform their benchmark, but all public market sectors outperform their benchmark, which this does not always happen. So it's a pretty extraordinary year. But just to give you a little bit of flavor, especially in the stock portfolio, the outperformance of some of our managers. Brandis, which is an international value stock manager, outperformed their benchmark by 8.3%. AeroStreet, which is a global stock manager, outperformed their benchmark by 13.3%. And Aberdeen, which is an emerging market stock manager, outperformed their benchmark by 9.7%. And then you can see the longer term results are all strong and well above the actuarial assumed rate of return of 6.5%. So an extraordinary year, but don't get too complacent because we know that this is an extraordinary year and we won't see these returns going forward. So then turning to slide 13, we like to see how we compare to our peers, keeping in mind that each plan has their own unique circumstances. So the first thing we look at is the middle box, which is return. And you can see for the longer time periods, the 5 and the 10 years, we stack up well in the top 30th percentile. But for the 3-year period, and even for the 1 year, which is not shown here, we're towards the bottom of the chart. Well, why is that? Well, we're different than our peers. Number one, we have, generally speaking, a lower allocation to stocks than our peers. As of the end of June, we had 45% invested in stocks compared to most of our peers who had allocations of 50 to 60% in stocks. Keep in mind, a lower percentage exposure to stocks means we have a less risky portfolio. Secondly, we have an even balance between U.S. and non-U.S. stocks, and that reflects the market opportunity. A lot of our peers tend to have a U.S. bias, and during shorter time frames, when the U.S. is outperforming non-U.S. stocks, that will cause us to trail our peers. But as I always say, return is not the only measure of success. We want to see how we've done on a risk-adjusted basis. So we look at the Sharpe ratio. And essentially the Sharpe ratio, which is the left box, shows you how much excess return we're getting for the level of risk we're taking. Here, a higher number is better. And you can see for all time periods, we're in the top 30th percentile. And for the 1 year, we were actually in the top 12th percentile. And that essentially means we are getting very well compensated for the amount of risk we're taking in the portfolio. And then the last metric we look at is standard deviation, which is a measure of volatility in the portfolio. And here, a lower number is better. That means we have less volatility, less risk in the portfolio. And you can see we're in the bottom quartile for all time periods listed here, as well as for the 1 year period, we're in the bottom 86th percentile. And the importance of having a less risky and more diversified portfolio is that it supports one of the guiding principles that is outlined in our investment policy statement. And that says that we diversify the investments to achieve a fair risk-adjusted return to support the long-term soundness of the fund. And that is exactly what we're doing. So that concludes my remarks, and I'd be happy to take any questions.
Liza, thank you very much. It's wonderful to hear this terrific news. And as we discussed yesterday, this doesn't happen overnight. This isn't just 1 or 2 simple decisions. It's a lot of thoughtful work by a large team of people over an extended period of time. And congratulations to you and everyone who's been involved with this. Especially look at the standard deviation. It's great to be in the bottom. Normally you want to be in the top. But having lower volatility means that it is that much, if you will, easier to think about the future and lower the risk in the portfolio. I have 3 other quick summaries of information for my colleagues here on the board. The Aon Townsend Real Estate Performance Report for the quarter ended March 31st. We had presentations by Jamie and by Felix Fells of Aon Townsend. And for the quarter, SDCERS real estate portfolio had a net return of 1.8% versus 2.0% for the benchmark. For the 1 year period ending March 31st, our real estate portfolio had a net return of 3.3% versus 2.0% for the benchmark. The largest contributors to performance for the year were the REEF, RREEF, if you will, Core Plus Industrial Fund, and the Clarion Lion Industrial Trust, which are both industrial funds. I have an update on the private equity and infrastructure performance and annual exposure analysis for the quarter ended March 31, 2021. For the quarter, the SDCERS private equity portfolio had a net return of 7.3% compared to 11.1% for the benchmark. For the 1 year period ending March 31st, 2021, our private equity portfolio had a net return of 46.7% versus 58.3% for the benchmark. The underperformance was due primarily to GCM Grosvenor's exposure to buyouts and distressed investments, which underperformed the benchmark. StepStone benefited from its exposure to venture capital and technology, and those continue to perform well compared to the benchmark. It is important to note that SDCERS focuses on long-term results. As of the end of the first quarter, the SDCERS private equity portfolio had a since inception net IRR of 17.6%, which is outperforming the pure benchmark, which is at 16.3%. The SDCERS infrastructure portfolio outperformed its benchmark for the quarter and the year. The portfolio benefited from its oil-related exposures as oil prices rose 24% last year. The fourth and final information update has to do with the DWS real estate separate account. SDCERS began liquidating its real estate separate account, which consisted of 19 properties, in 2016. The sale of one of the last two remaining properties was closed at the beginning of June of this year, bringing the total sold to 15. All but one sold at a premium over the valuation amount, with 3 properties swapped for shares in the AEW Core Property Trust. There is 1 property remaining in this separate account, which is expected to be sold in early 2022. This concludes the information items, and I think wraps up the investment committee discussion, unless there are any questions. And with that, I turn things over to the chair.
Thank you so much, Cliff, and that was an excellent report. And I also want to thank you for stepping up to be the chair of the investment committee. So really appreciate your service on that. All right, at this time, I'm going to ask if there are any questions and comments from the board president, trustees, or staff. I think Greg has some comments. I don't know if anyone else has comments, but otherwise, I'm going to turn it over to Greg Rademacher.
All right. Thank you, Karina. Appreciate that. To start with, again, I'd like to congratulate Mr. Kaufman on becoming our board vice president. Thank you very much, Paul. It's always a pleasure to put more things on your plate. That was very, very nice. I'd also like to recognize and thank CLIFFORD for joining us in the leadership of this organization as the investment committee chair. So thank you very much. I appreciate your service. I'd also like to recognize and thank Sarah Mayen for her board service. Although it was brief, we appreciate the time you dedicated to SDCERS, and we celebrate your new career move going to the city of Chula Vista. And we just wanted to thank you very much for your service. Very, very good. And as mentioned, looking to the future, we'll be conducting an election for the soon-to-be vacant general member board seat, and have already contacted our election vendor to determine election project plan. So we'll be moving forward with that. I'd also like to recognize and thank Cynthia Joyner for her service to SDCERS, the board, to her SDCERS team members and her other city department service. This will, as people mentioned, this will be Cynthia's final meeting with us and caps a very valuable 20-year career with the city. Thinking back, she welcomed me on the day I came for my job interview with professionalism and kindness. And she has been that way consistently and has been a very good person and a pleasure to work with during my time here with her. Her ability to personify our values of professionalism, integrity, accountability, and customer service while being a very nice person have been a strength we have all enjoyed and has been a key positive influence on our culture and I believe on our operational success. And so on behalf of SDCERS, Cynthia, we wish you all very many happy years in retirement filled with music, happiness, friends, family, as you suffer those horrible cold, wet Philadelphia winters. Bon voyage, and we will miss you very much. I would also like to thank Melody Hazard for serving as a very capable backup to our board secretary position. We are interviewing candidates next week for Cynthia's replacement. So things are moving forward. I'd also like to say that the Unified Port District requested a presentation on their most recent actuarial valuation report. Marcel and I are scheduled to present the Port's 2020 actuarial evaluation to their board on September 14th, along with some interesting comparable actuarial funding data on other California ports, which they requested. The Port's 2020 actuarial evaluation was conducted by our independent actuary, Chiron, and was approved by your board at the March 2021 meeting. Proposition B, just to add a little bit more to there, from Bobby's update for reopening the pension plan for certain city employees. At our previous meeting update, we highlighted the city's negotiation process with its represented employee organizations to reopen the plan to new hires on July 10th. And since then, the city has hired 30 new non-police employees, and we have successfully set them up in SDCERS. We've done it accurately, timely, and we've been receiving their member contributions. The city, along with its represented employee organizations, continue to negotiate and implement a strategy to reopen SDCERS to the previously excluded members. SDCERS, with the aid of Chiron, will continue to serve as a subject matter expert for the city and their unions as they work to negotiate to find a solution together for the currently eligible 3,800 city employees to transition into the SDCERS plan membership. I would also like to do some staff recognition. I would like to recognize our finance, investments, and members communications teams for achieving the Certificate of Achievement for Excellence in Financial Reporting for our June 30th, 2020 annual financial report, which demonstrates going well beyond the minimum reporting standards. This enhanced level of operational results reporting is especially important to demonstrate our commitment to SDCERS transparency value. I would also like to recognize the teams for achieving the popular Annual Financial Reporting Award, which recognizes SDCERS' ability to extract information out of the very formidable annual financial report to produce a high-quality report specifically designed to be readily accessible and easy to understand to those without a background in public finance. I would also like to recognize our information technology team for successfully completing our budgeted capital spending project replacement of our server farm. This is basically the heart and soul of our computing environment, and the cutover was complete without member service disruption, which is code language for IT team doing an excellent job in the midnight hours to ensure that few transition issues that were identified were resolved before the end users got out of the bed to start their day. So thank you, IT team. You did a very good job with that. And finally, I'd like to highlight the Orange County Employees Retirement Association requested a repeat performance of the lessons learned from the pension crisis presentation that I provided to their board in 2019. My September 8th presentation to their board was well received and sparked some very interesting governance discussion. The board's chair is, the OSERS board chair is hopeful that I can also find time to make a similar presentation to another board in which he serves. Thank you, and this concludes my remarks.
Okay, great. Thank you so much, Greg. It's good to hear all those accolades, and definitely want to also echo the kudos on the IT team. I had some issues yesterday, and I just received great personal service, so thank you to Alfredo Nito and his team too. Okay, we are
share really quickly. Greg's thank you. Greg's presentation to the OC group. One of the attendees who were there emailed me directly and said Greg did a tremendous job and was a very well put together and brilliant presentation and unsolicited. And so I just want to share that with the group that we have a tremendous CEO on our team.
Great. Thank you so much, Louis. It's great to hear. We are now going to move into closed session. So if you are a board member, please hang on. If you are not part of closed session, we ask you now to disconnect. And we will all take a little bit of a break to stretch the legs, and we'll reconvene in just a few minutes.
So Michelle, you just need time. anything else, because you do that. You just let them know when Michelle is ready.
Okay.
So Michelle, whenever you're ready.
It'll be just a second while we get set up here.
Okay.
Okay, we're ready.
All right. We're going to welcome everyone back into open session. We have just come out of closed session, and I'm going to ask our General Counsel, Johnny Tran, if there is anything to report out.
Thank you, Karina. There's nothing to report out of closed session.
Okay, great. Then we've made it to our last agenda item of the day, public employee compensation. I'm going to be recognizing Colin Brazil. Colin, you can take it away.
Thank you. Good morning. I'm Colin Brazil, the SDCERS Human Resources Manager. And per SDCERS board policy, it's the responsibility of the board to vote and discuss any proposed chief executive officer salary adjustments at this September meeting. As the HR manager, it's my responsibility to present you with the CEO salary survey of similar agencies in California. And today I'm here to review the salary survey with you and assist you with the decision. So the overview of the salary survey that you've already received. The data was provided by the CalPERS 2021 salary survey and the systems that responded for a recent information request. The report identifies the CEO salaries for similar, lesser, and greater sized California retirement systems. There are about 40 pension systems in California. We're number 14 with at least 20 plan tiers, making us a little more difficult and complex than our peers. The survey also has the number of staff members, the salary information of the CEOs, the Social Security participation, and the years of service as CEO. They are listed, the agencies are listed by asset size. For more information regarding salary increases, on July 1st, there was a citywide cost of living increase of 4%, which increased Greg's salary to $317,200. The maximum of his current range is $323,606. He is currently ranked 4 of the 6 similarly sized agencies. I actually, just for your information, updated these numbers when they were applicable. Some of the CEOs received an increase with the new fiscal year, so the numbers are current as of today on the salary survey. At this time, we're asking the board for a motion to propose any changes to Greg's salary, and I'm available to answer any questions.
Motion to approve, and we'll wait.
Thank you so much, Colin, for putting this information together. Can you help us to understand the grouping of similar sized plans? Just what plans fit in that group?
So on the salary survey where we are, San Diego City ERS, SDCERS, we're at the $10.8 billion in assets. So that first section, all of those agencies are similarly sized in asset size. And then the next section are the ones that are smaller, starting with San Mateo. And the final section, they're larger, starting with the San Francisco City and County. So they're in order by asset size, the first section rather being our current, the section that we fall into in the mid-range.
Got it.
Karina, can we ask Colin to share the survey on the screen?
Yes, that would be helpful.
We don't have.
Of course, let me grab it.
Unfortunately, we don't have the presentation here. Oh, hang on. I'm sorry.
So essentially, if peer group, the assets are ranging from just under 10 billion, 9.8 to 11.9. And San Diego's kind of falling right in the middle there at 10.8.
Correct.
With the average CEO base salary of 303, 240, and a total salary of 315, 303. So it may include some other salary components.
Yes. For example, if there is an auto allowance or a bonus that different CEOs may receive, then that's included in the other salary column.
Great.
Can I just ask a real basic question of the ranking of the plans based on assets, which I think on the surface of it makes sense. I'm just curious if there are other ways of ranking. Is it perhaps sort of the size of the number of employees, the way it's structured? Just curious how assets under management is sort of the pension size is the go-to ranking.
Well, definitely we could have ranked by the staff size. The assets are just really just determining how much the responsibility is for the CEO, which is why we chose the amount of money that is actually being managed. But we can definitely structure it with the staff size or any other ranking you prefer.
No, I defer to your expertise. I was just curious of the thinking behind it. So.
Mm-hmm.
Paul, this is Paul Kay here. One thing we have looked at in the past is the number of tiers within each plan. I think we've got, correct me if I'm wrong, Corrine, I think we've got 27 tiers at SDCERS, which is by far and away the most complex of all the top-ranked or the plans that you're seeing on the upper portion of the screen here.
Can I ask too, Colin, so up above we say that Mr. Rademacher's current salary range is approximately $81,036 to $323,606. Where is this set and or determined?
The salary is actually in the salary ordinance at the city. It is for unclassified, there is a salary table for unclassified unclassified positions rather. And that is set by them. So if there's a large range, and we just have to make sure that the positions within the range fit, the salaries are in those and within that range. So it's set by the city in the salary ordinance annually.
Okay. So Greg is falling toward the top end of that range, currently at $320,800. Now, does that 323, does it really reference the base, or does it reference the total salary? Does it reference the 317, or does it reference the 320 number?
323 is the maximum for the actual salary. Like the 317 is his actual salary, it's his base salary.
Okay, so that's for the base.
Colin, could you share with us, sorry, yeah, this is Paul. Could you share with us where the CEO fits relative to the other highly paid individuals in the organization? I'm specifically referring to Liza.
Liza is in the top of at the top of the range at 323. They're in the same category.
Okay. Is Liza's salary higher than Greg's?
Yes.
And just for clarity, so Liza, her base is 323, and then she's got some element of other salary, and then her total salary is what?
That is a good question. But I believe Liza's base is, her salary is actually 323 because she's not the director of the department. Directors of the department get additional pays like auto allowance and add-on and different management leave. But I don't believe Liza receives that because she's not technically the CEO of the department.
Okay. So the 323 for Liza is her total salary.
Correct.
Got it. Thank you.
So, Colin, this is Michelle Bush. As a clarification, does that mean that the increase cannot exceed the top of the band? So the 323 is the maximum that the position can, for base salary for the position?
Correct. Which is approximately 2% from what he makes now.
Colin, do we have an opportunity here to go beyond that band?
No, sir, this is the highest range that the city offers.
Well, this is Bobby. I, for one, think he should be at the top of the range at a minimum, that we should raise the 317 to the 320, to the top of the range, to the 323. So I would like to throw that out there.
Excuse me, may I interject?
Yes, right.
I just wanted to clarify that Liza is nearly at the top of the range. I adjusted her salary to $320,000. So.
Thank you, Greg.
Thank you. I'll be quiet.
There is a motion on the table to increase Greg's base salary to $323,000.
A second.
See, you need a second.
I heard a second. I think it was Lisa Harris.
Yes, Lisa Marie, yes.
Oh, thank you. Sorry about that. Any further discussion? If not, I would offer my support. Greg, it's been a tremendous year, and you've shown such leadership working through all of the COVID restrictions and also the benefit changes, dealing with our stakeholders, and the turnover of the board and filling all of those vacancies, as well as securing fiduciary counsel to attend our meetings and overseeing as well the implementation of a written code of ethics. You and Johnny kind of share that crown. So it's been a tremendous year under challenging circumstances, and I would offer my support. If there's no further commentary, I would ask Melody to call the roll.
I'm sorry, could you repeat who was the first and second again, please?
I believe the first was Bobby Spoon,
Okay.
and the second was Lisa Marie Harris.
Great, thank you.
Don't ask.
Okay, ready to vote. Karina Coleman,
Yes.
Michelle Bush,
Yes.
Natasha Kalura,
Yes.
Lisa Marie Harris,
Yes.
Charlie HOGQUIST,
Aye.
Paul Kaufman,
Yes.
Paul Lotz,
Yes.
Louis Maggi,
Yes.
Sarah Mayen,
Yes.
Louis Nguyen,
Yes.
Cliff Shearson,
Yes.
Bobby Spoon.
Yes.
All votes are in. Motion passes 12-0.
Wonderful. Thank you so much. And again, congratulations to both Greg and Johnny for stellar performances this year. It was a year of like no other. With that, I'm going to thank everyone for their time. I'm going to call the meeting adjourned.
I'm sorry.
Greg, have a comment?
Yeah, I just wanted to make sure that we provide Colin adequate direction with regards to my salary adjustment. I am assuming that's going to happen at some point in the future. Maybe Colin you could provide Colin some direction on when you'd like that to be effective.
Oh, well, I guess that would be the next pay, if that's the next pay period.
Well, when is your anniversary date?
February.
Then it's probably the next pay date.
Okay. Thank you. That just helps organizationally. Thank you.
Right.
All right. With no other comments, then we're going to call the meeting adjourned. Take care, everyone, and stay safe.